Breakouts and retests are one of the most popularly traded technical strategy. It is even so popular that every single technical analyst must have heard of the term breakouts and retests. In this video, I'm going to be showing you how I was able to catch trades that look like this, and this, using a simple breakouts and retest concept. And just to be sure I was not lying to myself, I shared this concept with my 22,000 Telegram subscribers, and they were able to produce results that look like this, and many more. If you want to find out what that concept is, you might just want to stick to the end of this video. Let's get right down to it. Hello guys, you're welcome back. And yeah, so for this video we're going to be focusing majorly on breakouts and retests, and I'm going to be bringing in something you might have probably not heard, but you're going to be hearing for the first time, which is the fifth touch rule, or the fifth rule, whichever one you would like to call it. But before that, I understand there are newbies who might be watching this video, so I'm going to start first with explaining what a breakout is. Alright, so a breakout is just very simple. I'm not going to use a dictionary, nothing else, just something out of my head, and I'm going to define the breakouts in this way. Now, when there has been over accumulation on a psychological level, what are psychological levels? We have psychological levels to be levels where price naturally gets to and stop. So let's say we have price come here and drop, then price come back here again and drop, right? Price come back again and drop. That particular level has now been established to be a psychological level, right? Psychological level. Why? Because people will actually naturally assume that when the price comes back to this particular place, it's going to drop again. Now what happens is that when there is an over accumulation, right? When there's an over accumulation on this particular level, right, it builds up liquidity, right? And what does the market do when liquidity is built up in this kind of thing? The market sometimes uses it as when market uses it to fuel the move to the upside, we call it a breakout. But when the market just takes liquidity out of it to come down, we call it a sweep. But we are not looking at sweeps for now. We're just looking at breakouts and retests. So what's going to happen is this: price is going to come here, break this particular zone, right? And then that's what we have our breakouts. Our breakout has been established, and then price is going to come down to retest the breakouts before we have a new trend, right? So but for this video we're not going to be looking at this. We're not going to be looking at this at all. What we're going to be looking at is way different from this. So now psychological levels can be in form of support and resistance, and can be in form of trend lines, right? So if a trend line actually has something like this, so let's say we have a trend line, right? And price continually bounces off of this trend line, continually bounces off of this trend line, right? And all of a sudden we have a break, right? Now when price breaks out here, price is going to come back to retest the level that was broken to see if it's going to hold. And what happens if it holds? A new trend will ensue, right? And that's literally the concept we're going to be looking at today. We're going to be looking at the fifth touch trend line rule, right? Now this fifth touch trend line rule, for this first consideration, we're going to be using EURJPY. That is my pair of choice, and we just call it a EURJPY case study, because in this video we're going to cover at least 3 to 4 different pairs, and you're going to see this particular thing play out in real time. In the intro I said I shared a snippet of this video to my community on Telegram, and they were able to actually produce results from it, and so you can see it works. So without further ado, let's get right down to it. So we've established the definition of a breakout and retest, and we've established the types. A breakout can happen on a trend line, it can happen on a support and resistance line as well, right? Both a horizontal, a vertical, or diagonal psychological level can have breakouts. So these are the 4 things we are going to note in this particular video. We're going to first note about our key level mitigation or sweep. A key level mitigation is just simply when price comes into a POI, right? You know POI is to be your points of interest. So if that happens, it's either that happens, or we have a sweep of the internal low, or the what, or the incomplete pullback, or we call it the inducement, right? Now, after that happened, we're going to now be looking out for what? Trend line psychological bounces, right? Now, the second one says fifth touch if trend line bounces are established. So after we've established a bounce on the trend line, we're not going to wait. We're going to be waiting for the fifth touch, right? The fifth touch, and now the fifth touch is always the breakout. The fifth touch is always the breakout, right? This is what I mean. Now let's just say we have a bounce, drop. This is a downtrend, bounce, drop, bounce, drop. Now already we have already started establishing that, okay, something is here, something is holding price, right? Something is here and something is holding price from going further downwards. What could that be? Something is here and something is holding price from going further downwards, right? Now this is 1, this is 2, this is 3, right? For clarity's sake, this is 1, right? And this is 2, right? And this is 3. Yeah. So now we're going to now what? Wait for the fifth one. So the fourth one comes, bounce, and then we have the fifth one to maybe do something like this, and what? Boom, we have our breakout. Price will come back, retest the what? Trend line or the psychological level before what's going up. And now our final target is what's always at 1, right? Our final target is always at 1, right? Our final target is always at 1, but we can actually have what? Minute targets at 3, or we call it TP1. Can take profit at 3, or we can actually maybe secure partials at 3. We could also take profits at 2, but the final target is always what? Number 1. That is what's the final objective of price. Now the third consideration, the third thing to note is that there's going to be a retest of the breakout level, right? There's going to be a retest of the breakout level, which is what we have managed to establish here. There's going to be a retest of the breakout level, right? And then the fourth one is we're going to continue the trend until the final target. So should, in case you're not able to catch the retest, you're going to also be able to get into what? The moves that are established when price is what? Moving to the take profit zone. Now this is what I mean. So you know, the price doesn't just move like straight up to the profits. Price can sometimes keep bouncing, keep making small moves, until we get to this place. We're also going to look at how you can be able to what? Catch these moves, how you can be able to capitalize on these moves, because like when price breaks and price has retested, it's an established something that price is going to what? Get to the final target. So you can just make do with what? The very easy continuation ride that you see here. So I hope that's clear. All right, so let's look at this one. So I can actually see something happening here. All right, so this is one of also the trades that I took, and I'm going to show you why I actually took this trade. Okay, so we can actually see that obviously we are on an uptrend, right? As long as price has not broken this level, right, we are in an uptrend, right? As long as price has not broken that level, we are in an uptrend. So we have our breakout structure on EURJPY, right? And we can see that this particular move took out liquidity, obviously, right? So I'm going to be cutting price from this zone, so I'm able to show you what really happened. So okay, let me just take and show you what happened. Okay, so I'm going to be cutting price from that zone so we can actually see. So when price actually cleared this liquidity, we had this particular confirmation that okay, yes, price is still bullish. You can see another break, and we have this to be our what's incomplete pullback or inducement. As you know, it's also a form of liquidity, and this is our POY. The POY that the inducement is foiling is this one, right? That was our POY, right? That is our POY. So I'm going to be looking at the interaction around this area. What price does around this area will determine what we are going to do, right? So I think we're going to actually leave it at that for now. So we're going to be expecting that price actually creates some form of like move here that will validate what's this POI, right? This POI. So let us see what happens. Let's see what happens. I'm going to be taking this off so we can actually have some clarity. So obviously, let's come down to the 1 hour time frame because you can't see anything from the 1 day time frame, right? So I'm going to be coming down to the 1 hour time frame, and okay, so let's look at what's happening, see if we can actually build some form of establishment or some form of touches, right? So okay, let's play price 1x so we can be able to see something. Although I'm seeing some form of resistance around here, note that you may not be able to see all the resistance, right? Sorry, you may not be able to see all the resistance, right? But if you can be able to spot out 1 or 2, you're on your way. So you can see the first touch, you can see another touch, right? Let's see how it goes. You can see the first touch, you can see the second touch, and okay, right? Price is what's heading very slowly to the point of interest, the POI. Price is heading towards what's the POI. Okay, so we have 1, we have 2. Let's look at what happens. It's moving very slow. So can you take it to 3x so it goes fast? Okay, boom. We have price tapping towards that area, right? So ordinarily 1, 2, 3. If you want to actually mark out the trend lines very well, you can actually use a line graph, right? You can use a line graph so it shows you where exactly the touches were. If candles confuse you a lot, you can use the line graph. So we have 1, we have 2, we have 3. Can we get the 4th one? So let's see if we can get the 4th one. So we have 4, right? We have 4, and then let's see the 5th one. And boom, you can see the 5th one is what? A breakout, right? The 5th one is a breakout, and the 5th one, if we are going to look for our entry, right? If we're going to look for our entry, so we call this one 1. I'm not going to be typing down again just so you can see. Let's say 1, let's say 2, right? We have 3, and then we have 4, right? Those are the closest touch to the trend line. So we have 1, 2, 3, 4, and we know the 5th one is what? A breakout. Now remember that we have these particular zones to be our target zones. So we're going to target at what? We're going to target at 3. We're going to target at what? We're going to target at 4, at 2 rather, not 4. And we're going to target at what? We're going to target at 1, which is the final target, right? So right, so coming down here we can actually see our POI. This is a POI. This particular POI here has been mitigated. This one has been mitigated, right? You can see price came into it, has been mitigated. This particular one as well has been mitigated, right? Leaving us with only this POI here, right? Leaving us with only this POI here. So, but you need to be careful when you're trading this type of POIs, because most times price used to like just skip them, right? By skipping, I mean price will just miss your entry. So what I normally do is this. So we now have what's our usual breakout structure, right? We have our normal usual breakout structure, which is this. You can call that one what? BOS, right? Our usual breakout structure, and we have our POI, and then we have some form of what's a pullback here, which we can actually use as what's our liquidity, right? So typically I would want to take the trades in this fashion, just so you know I don't miss the trade. My entry will be on the liquidity, and then my stop loss would be what? My stop loss would be what's below the valid POI, right? And then my target is going to be what's at the number 1, right? So we have like what's a 9:3 hour setup. A 9:3 hour setup. So let us actually now watch what price does. A 9:3 hour setup. Note that when the breakout has been established and you've actually positioned your entry, like I said, it doesn't end there. You can still be able to catch what continuation shift. So where are those criteria you considered in the beginning? Where did I take them to? Where are those criteria you considered at the start? Okay, let me just bring it here so that anyone who is confused can actually, or you can even screenshot it and just follow us along, right? Okay, so let's ride this move. So I'm going to actually play price and see how it all unfolds. So boom, we've had our first tap, right? We've had our first tap. We've had our first tap. We've had our first tap. So this first tap has been what's established, and you can see the second break. The second break also was brought an entry, another block entry. You can see that very neat. So let's go. Let's keep going. We have the third break, right? We have the third break. We have the third break. Can see that this level was used as an inducement. This particular one was used as an inducement that fueled this move, right? So we have our third break and we have like FVGs here. This other block doesn't really look valid to me, so I would just rather stick to one of the FVGs. Stick to one of the FVGs for our entry. Let's see how that one goes. So you can just be riding continuations. Boom. Can be riding continuations. When price breaks structure, you ride continuations. You can see that when price breaks structure, you ride continuations. When price breaks structure, you ride continuations. Another block again after a break. Another block again after a break, accompanied by an FVG, which gives it some sort of validity, right? You can see this, and we should also be expecting price to come into this zone as well. Okay. And you can see that price is heading towards the ultimate objective, right? Which is what's this particular final target. Price is heading towards the ultimate objective. So you're going to see that you're going to be able to hold these trades for a very long time, and you still be able to you still be able to catch future trades, right? You still be able to catch a lot of trades. So we are still holding to see if price makes it to the final objective. You can see that this expansion happened here. Price some sort of reacted from here, right? And boom, finally I think we've reached the final objective. We've reached, and that is what's a wrap. We've reached the final objective, which is the final take profit. And you can see that you're able to catch not just 1, 2, 3, 4, 5, 6 entries that rode towards the final targets, right? That road to the final target. And this is how powerful the fifth rule is. In the other video, you're going to be seeing a case study on all other pairs. I'm going to be covering GBPCAD, I'm going to be covering GBPJPY, I'm also going to be covering EURGBP, and you're going to see how this particular concept plays out the same way in those other pairs, right? So this particular case study is just going to be what's on GBPCAD, right? Great British pounds, Canadian dollar. So you can see this very beautiful uptrend. It is not our concern anyways. Let me just show you something real quick. So I have like a concern somewhere above here, and I'm going to show you, right? So I'm going to first replay price to this particular place. Okay, Let me show you something magical that happened and how it correlates to the 4 things we wrote out. So as you know, after a breakout structure is going to leave behind the demand, and we'll be having all of that from here. We have a break, we have a break, we have a break, right? We have a break. Now this break left behind an incomplete pullback, which was used as what? Liquidity, right? And price came into this demand, the other block, right? So obviously that the place price is going to head to is what's the target point, which is the highest high here. This is the target point, right? And we can actually see this very beautiful FVG, right? So I'm expecting that price comes into this FVG before what's getting to the target. And this FVG, obviously that price reacts to what 50% of an FVG, right? Which is the consequence encroachment. So I'm going to be looking for any reaction that happens on the 50% mark that I have drawn and what react from there. So let's go to our 1 hour time frame, which is one of my favorite time frame, and see if we can actually establish some trend line touches and see how we go from there, right? So let's replay price. This speed is too much. Okay, let me use the 1x. Right? Okay. I have established like 2 taps, right? Or 3. 1, 2, 3, 4. Even 4 taps, if not even 3, right? Right? 4 taps. Okay, this is 1, 2, 3, 4. So you're going to be expecting a breakout, right? And you can see that price has tapped on what's the consequence encroachment, which is they're going to be expecting a breakout here, right? This one went so quick that it didn't even give room for retracements, right? And we are going to have boom, our breakouts, right? We're going to have our breakouts. Now this is the place I would have wanted to enter this trade, right? But some breakouts can be so quick that price may not even really come back to this particular zone. So if we are going to use the FVG that has been formed here to enter the trade, we are going to be targeting what's this high. So we're expecting something like this. Either price comes from here and then goes up here, or we have price come down to this zone before going up. Either ways, any of them is gonna play out first. So if price actually breaks through the if price breaks through the FVG, I'm going to consider the other block next. But if price doesn't, I'm going to ride the move to the end. Although the thing about, like I said, the 4th thing is you can actually establish continuations. That is, you can take continuation trades and ride it to the end of the trend. So you can see it didn't even come back again. It just went up from there. It just went up from there until boom, finally got to the take profit. So if you had entered from the breakout mark, and placed your stop losses below the breakout mark, take profits, obviously at the end you're going to be ending up with a 4:2. This stop was even much, a 5-hour trade minimum, right? A 5-hour trade minimum. Anyways, this one is all for GBPCAD. I'm going to show you guys the one that happened on EURGBP next. Yeah, also we have this on EURGBP, right? And let's see, there is really no point of interest here, so I'm going to be expecting price to take out this sell rejection candle as an inducement and fuel a move, right? So for now, okay, there has been 2 touches established. This is touch 1 and here is touch 2 and 3, right? I'm going to be expecting touch 4 to be established before we have a breakout, right? So let's see how this particular one goes. Let's play price action and just sit tight and watch what happens. So we have 1, 2, 3. We're expecting touch 4 before we expect touch 5, and touch 5 is always our breakout, Okay, so touch 4 has happened, and so you know the 5th touch is going to be what, a breakout. And before that, you see what price is. Price swept liquidity from that low, and boom, price broke out, right? Price broke out, and you can see that price came back to retest this particular zone. And you know, when we take our buys, all roads towards to the final targets. All roads to the final targets. 12 hour, right? All roads to the final targets, and you can see price gracefully heading up. Remember, you can also catch continuations, very easy continuations from this type of trades. You can catch very easy continuations from this type of trades, right? Very easy continuations from this type of trades. Okay, so price came into this fair value gap. Remember, like I said, when price wants to react to a fair value gap, it reacts up to the 50% mark, right? So that's the consequence encroachment, and we can actually see that when price came into that level, price left behind what's an order block, and we can use this order block for our move to the upside, right? So an FVG in front of this other block, the other block also swept. So it's actually a protected level though, because we have our sweep, we have the other block, and we also have what's our inducements, which is this. And I'll be willing to take this trade from anywhere from here until what's the final target as well, right? Remember that all road leads to the final target. All road leads to the final target. Every trade we're taking is in respect towards where price wants to head to finally. All road leads to the final target. So this is a 5-hour trade, and let's see how it goes. All road leads to the final targets. Remember, this is our protected level here, and boom, very beautifully price came into the level. Price came into the level. All road leads to the final targets. All road leads to the final targets. All road leads to the final targets. Boom, finally, the final target has been what's met. And this is the case study on what's EURGBP. So the next case study we're going to be doing is going to be on what's GBPJPY, and you're going to see how that particular trade as well respected the 4 parameters that I listed out. Alright, so this is a case study on what's GBPJPY, and you can see that it looks identical to what we actually saw on what EURJPY. Now note that every other criteria was respected, right? Every other criteria was respected. Yes, indeed, price actually came into a demand. I'm going to show you when we get to the higher time frame. Yes, indeed, price came into a demand, or either swept, whichever one. Yes, indeed, we have our first touch to be this, right? We have our second touch to be what's this. We have our third touch to be what's this. We have our fourth touch to be what's this, right? And then remember that the 5th touch is what, the breakout. So if you trade breakout blocks, you'll be able to catch the entry from here, right? You can see price came into the breakout block and then move. Although if you're not able to even catch all these moves, or if you're not able to catch the breakout, you're going to be able to catch this move, you'll be able to catch one here. You're going to be able to catch so many moves, and you can see that price at the end of the day went targeted the last target, which is the number 1. Price went straight to the last target. All road leads towards point 1, right? All road leads to point 1. So although I'm expecting higher prices on this particular pair, because if you check on the daily time frame, it is very bullish, right? So I'm expecting that GBPJPY, which is this pair, it comes up to this level here, this high, because we have our break, right? And this break price actually swept this particular low as an inducement, came into this FVG, and then it's going up. So the final target should be somewhere above here. So price will come into any of the demands here before going up. And I think with that we can call it a wrap, right? So next time you actually see 5 touches on the trend line, you should be expecting a breakout on the 5th one. When you see the 1st, the 2nd, the 3rd, the 4th on the same trend line, just be expecting a breakout on the 5th one. And with that, we can call this video a wrap. If you do have testimonies and results you want to share, you can reach me on Twitter at TechChrisTM, Twitter or X currently, formerly called Twitter, or you can actually search my channel TechChrisTM on Telegram, and you can join 22,000 persons who I teach every single day how to become better versions of themselves, how to become better traders, right? And just leave me an MVP if you watch this video to the end. I want to use that to know those persons who actually have followed through to the end of this video. And with that, we've said a lot, and I'll see you guys in the next one.